Hello, everybody. Welcome to episode 34 of Distressed Deals Decoded, where real estate problems meet real solutions. Brought to you by your friends at Asset Resolution Advisors. So, today we're diving into another issue about emerging opportunities for real estate investors and real estate agents. Today, what we're going to talk about is today's market at a glance. So, before we get into it, I have my esteemed colleagues here, Patrick Butler
Hello, everybody. Great to see you.
and Juan Nasio,
Hello,
Mr.
hello, everyone.
ACQ himself.
Yes, let's go.
All right. So, for the past couple of years, everybody keeps asking the same question. When is the market going to be back to normal? The truth is, I think this is the new normal. Today's real estate market really isn't defined here by crashing prices or skyrocketing appreciation. It's really something much more important. And it really has to come down to who is motivated to sell the property. So today, what we're going to talk about are three major forces reshaping the housing market. And more importantly, what today's agents and investors should be doing to build their business within this market environment because we don't think it's going to be changing. So, Juan, let me start with you. Foreclosures are rising, but slowly. Why is that important for everybody to know?
Well, the media really loves dramatic headlines, but that's not what we're seeing, right? There's a couple of points that we have to make here and what's really going on in this current economy, right? Foreclosures have increased from historic lows, but now they're not as high or near the levels of 2008, right? Today's borrowers generally have more equity in their house. Obviously, we had a boom back in 2020, 2021 through 2020, I would say early 2024, where the prices of homes even doubled, okay, from when people have bought it. So people are sitting on a good amount of equity. Better credit quality, right? A lot of people are not completely uncredit worthy. Home loans are still being approved, credit cards are still being given out, people are still spending, people are still shopping. And we have fixed rates, right? In the past, we used to have all types of different products to fit a square peg in a round hole, right? We would have interest only type of loans. We would have variable loans. We would have all types of crazy types of mortgages to just try to inflate the market or at least get homeowners to afford property for the last over 20 years almost now or not more. Most of these mortgages have been fixed and at a low time, at an all-time low. Guys, there are people that have mortgages as low as 2.3%, 2% even, right? And so those people are just sitting there, just going through the motions and just preserving their property. Servicers have significantly more or less loss mitigation tools than they did 15 years ago, right? So because of that, obviously they're able to see, right, what the current market really is, the valuations of properties faster, better than, and all the data that they have access to than before, right? Before you absolutely needed to depend on an appraiser to go out and do all of that due diligence, or maybe a BPO specifically in order to get values. Right now, a file can come in and they already know, hey, this properties in this area, these are the values because of their values, because of the values, right? We have all the data to back this up. Now that something may be different when an inspection or appraisal is done, that's a completely different story. But we have so many more tools now to really help understand what the real values of these properties are. We don't have the influx of properties sitting at their desks that are not moving, right? So the real story is that there are distressed homeowners, just not enough to flood the market. Instead, distress is becoming highly individualized. So, for example, areas or individuals that have job losses. We understand job losses are increasing, but it isn't at an all-time high. Divorces, obviously, that comes with job losses and other economic situations. That's unfortunate. That's unfortunate, but that's an individualized situation. Illnesses, probate, bankruptcy, death. Obviously, there's 100% death rate in the world, so it's going to happen every single day. But that's again individualized. It's not a big sector or group of people that are going through that. HOA foreclosures or inherited properties. These situations create motivated sellers regardless of the overall market condition. That's always going to happen, right? But it isn't some big tsunami. So stop waiting for that foreclosure tsunami because it's already here, right? It's just one property at a time. So, my friend Patrick, oh, you got something, Steve?
I wanted to add a couple things to what you said, and I'll go to Patrick here. So, what's interesting, what you're saying about the equity and foreclosures and whatnot, right? Is one of the driving forces that brings properties down, usually property price down, um, are the oops are the foreclosures, right? You lose value in a foreclosure. Well, why do people have equity? Well, what a lot of people did was they refinanced during the COVID who had some equity. They refinanced, they got into a lower interest rate, and they continued to pay 3, 4 years, right? And those people have equity in their home, but they're not getting foreclosed on like they normally would have, right? Because they're trying to keep into these low interest rates. They're trying to keep into, they have equity. Some they do cash out refi. So there's so many reasons why people are not going through foreclosure anymore. And they're just staying with where they're at and they don't have quote unquote distress. So I think we'll get into it more, but it's an interesting point of why there are not as many foreclosures as people thought, and something to think about. That to your point, Juan, we're at it. We're where we're supposed to be. All right, Patrick. So give us the second section of talk a little bit about it here. What's going on?
So we hit the first part, right? That there's always lots of foreclosures forever and ever. Whenever there's mortgages, there are foreclosures, right? There's a default percentage that always happens. Sometimes it spikes, sometimes it dips. So that's one major factor. The other factor that we see and we hear all the time, there's no enough inventory in the real estate market. I've got nothing to show my buyers. Well, there's a couple reasons for that too. So coupled with number one, where all the reasons Juan mentioned that are motivators for sellers used to be escalated, right? If they were going into foreclosure, they went into default, the bank was threatening to take their home, that pushed them to take action. Well, over the years, with loss mitigation solutions and other options, the homeowners have been given a softer ride to the end. So that's one. Two, the 3%, as you talked about, Juan, or 2.3% low mortgage lock-ins. The homeowners that have these low mortgages, many of them who should be selling their home in the life cycle of real estate, right? They maybe had a starter home, their family's growing a little bit, time to move up to the bigger home, but they're looking at that 3% rate. They're getting pre-qualified by their mortgage broker, and they're finding out that their payments are actually going up double, or in some cases, even worse than that if they upgrade to another property. So if they got a 3% mortgage rate, for example, and their home value is now worth $600,000, they might only have a $300,000 mortgage balance. Well, they've got a ton of equity. That looks fantastic from the perspective of the rest of the world looking at that. But the problem is they're not selling the property because mentally, and this is the thing, folks, that 3% mortgage is holding them back. It's like the rule of thumb that a job can be an anchor tied around your neck. If you want to become an entrepreneur, that hourly wage or that salary is holding you back from making the millions. Well, that 3% mortgage in many cases is holding these folks back. They're trapped, but not by the debt, where another segment of this group that we're talking about are those that are over leveraged. They're trapped by debt, but you've got these folks that are trapped by affordability. So inventory stays tight, the move up buyers stay put, repeat business slows down for real estate professionals in particular, and they're feeling the squeeze. So what should agents do? Just sit back and wait for things to change? Well, I think we covered it in the very opening statement. This is the new normal for the time being anyway, until something else happens. So problem is we're asking the wrong questions sometimes. Real estate professionals, it's not finding somebody that may want to move, they may need to move. We take all the reasons Juan listed, And even for this group that have the equity, maybe they have to move. Maybe there was a job loss. And even though they've got equity, they can't afford the mortgage payment. So we need to ask probing questions that are beyond, hey, would you like to sell your house now or in the near future? But maybe, are they current on their mortgage? Is there anything going on in their life that maybe is changing that? Are they falling behind? Have property taxes. Steve, you and I talk about this all the time. The property taxes, the insurance, credit card debt, car payments, everything combined is beginning to choke them out. And again, equity is wonderful, but it does nothing for your monthly affordability. It's just money sitting there waiting. It's frozen until we tap it. Has there been any hardship, such as a job loss? Are they carrying other debt? Blah, all these things, bankruptcies, HOAs, medical bills, all these things can cause a person to need to move. So at Asset Resolution Advisors, we see this every single day. And the key is to ask the right questions so that what's going on in a homeowner's life. If they've got equity, that's great. The solutions are much more abundant for them because they can sell. Even if they have to go rent someplace, at least they've got enough money to hunker down for a while. It's the group that have no equity. That's another batch that are in trouble. And we're going to be talking about those as well. So all of these things come into play. The inventory is there. It's a matter of how do we tap it? How do we release it from its shackles? Steve, back to you.
Thanks, Patrick. Those are all great points. And we do talk about this quite interestingly a lot because I think there's a segment of those people who are in the 3% range who are just, they're staying put. They're just, they normally, in a normal cycle, right? Historically, you would see people leave, right? They're going to upgrade their house, they're going to downgrade their house, meaning like, hey, they need more room, they need less room, whatever the case is. And we're just not seeing that. People are just not moving as often. We were looking at some statistics specifically for this, and there's some interesting pieces of information, right? When I got into the industry 20 plus years ago, I was always told, well, mortgages go against a 10-year treasury bond because most people move within 7 years. So they value the mortgage based on that 10-year treasury bond. Blah, blah. I'm not getting into all that, but that's typically what it is. When you look at it, home ownership is no longer 7 years. It's much longer. We're now talking about 12, 14, 15 years. That's pretty significant change. Patrick, we looked at what about new homeowners, right? Starter homes usually were 6 to 8 years. They're now, because of the economics, it's like 12 to 15 years. So all of these things have jumped. So when you take two very large groups of individuals who normally would have been selling their properties every 6 years, every 7 years, right? Think about it. COVID started in 2020. We would be coming into the height of that group of people who would be looking to sell their home, and it's just not happening.
Right.
So it's just people are less motivated, right? It's the 3% mortgage, it's the equity, it's all of these things, just a very big critical shift. People just are not moving. And so really what that makes it out to be is that the people who have to move are the ones who are driving the market right now. And what most agents don't like talking to the people who have to move. They only want to talk to the people who would like to move.
Very
And
good.
that's really the key here of what we're talking about. So, Juan, I'll pass it back to you here. Talk a little bit about this new motivated seller, because that's what our audience is going to need to start focusing on if they really want to kick it into gear here in the next year and a half.
I think you guys hit it on the nose where the theme of this podcast is motivated sellers. And people have I guess, the wrong interpretation of what that means. A motivated seller needs to sell. It's not someone that wants to sell. There's a very big distinction between the two. And so there are two types of motivated sellers today. One is going to be the equity rich, but they're in default. Believe it or not, I know it sounds like an oxymoron, but it is a thing. There are people that have equity in their property and they're filing for bankruptcy. They don't know how much equity they have, but they do have options. They have a lot of options. They can sell traditionally, right? List it with a real estate agent, be patient, make sure that the house looks like in great shape, and make sure that you can get it as much money as you possibly can out of that particular traditional sale, even though it may take some time. They can negotiate with creditors. You have the option to do that because you have the equity, right? You can stop foreclosure. Typically, you're able to navigate with an attorney or loss mitigation and stopping your foreclosure and figure out whether you need to do a short sale if maybe the house doesn't have as much equity as you think, but typically these people have high equity. You're able to postpone it until you can get from underneath this property. And also they have option to preserve, they do have option to preserve equity, right? But they need guidance. They need the right people to educate them and say, hey, this is where the state of the market is. These are the options that you have in your current situation. Okay, I know you understand you're in default, but these are the options that you have in order to come out ahead in this current market. And many people don't realize how much equity they really have, right? And they wait too long to try to figure that out. Category number two.
Oh, hey, let me just jump in there real quick too. By the way, what we're seeing a lot of is the folks that have a lot of equity. Some of the investors in particular that we're working with, they're doing partitions on probate deals where
Oh,
there's
sure.
multiple heirs. They're buying one or two heirs positions
Yeah,
out and they're sharing in that equity. And Juan, you're right. Sometimes the equity isn't even my home. It's my deceased parents' home, or it's
correct.
another property that I really don't have an emotional tie into, but there's gold
Mhm.
in our hills. So those are the things to be looking for and why we talk about those probing
And
questions.
You're giving
and
away
and
too many nuggets.
and you brought up the point where people don't know how much equity they have, which is a really good point because what's happening is they think I'm not going to lose anything, but wait, and then it gets too late, and then they end up not having the equity at the end of the
Mhm.
day. They do have to do a short sale. There,
Which we're
there's
seeing.
there's motivation, right? Oh, I don't want to lose my 3%, but they can't even afford
Sure.
taxes, insurance, this, that, right? And it's like
Correct.
take the money you have in hand and figure out something else in this market, but don't let that equity go away, which is what we're seeing.
Yeah.
We're definitely seeing that. I've spoken to a lot of homeowners that they were like, well, what happened to that offer you made me last year? I'm like, that was last year. That was last year. This is a different market, right? So they're letting equity slip from their hands, right? Because they don't know what they don't know, right? And like the second category would be those folks that we commonly work with is people that are upside down and in default, right? These owners have fewer options because of many of the reasons that we spoke about before. They waited too long, right? So now they need professionals that understand how to do short sales, not short sales from 2005, right? 2008. It's a completely different world. People that know how to do loan workouts, professionals that understand bankruptcy, which is completely underrated and misunderstood. That's a huge opportunity gap right there. Lien resolution, which of course, that within itself is another um, attribute to ARA, understanding lien resolutions. And then title issues, curative title. There's so many folks that just get entangled with these title problems that attorneys and or title companies think it's incurable. And figuring out how to overcome that honestly creates opportunity for investors and homeowners alike because most people feel there is no options, there is no way to fix it, but where there's a will, there's a way, right? So these are exactly the situations where expertise matters. This is why it's important for you guys to be involved in this type of knowledge, this type of information, because this is what's going to allow you to thrive in this new market, right? This matters because both groups are motivated, right? The one with equity and are in default, and people that are upside down, the same. They both need help. Both need, it represents opportunities for everyone involved. If you are a problem solver, you as an agent can get more listings. As an investors, you can unlock equity, you can unlock great freaking deals. As a lender, hey, the property has sufficient amount of equity in it. Why could we get a lender involved, right, to either cure that default, or as a lender, why not figure out solutions to get this thing back in performance? Title companies, why don't you close more deals? If you learn how to overcome the title curative lien issues, well, you can close more files. Same thing for attorneys, right? The difference is knowing how to identify these things early, because unfortunately, timing a lot of times is not on our side if you wait too long, right? The longer you let this linger, the more costly and or your time lapse just elapses and your property is gone, and your opportunity is gone to make money if you're on the professional side of things. Okay, so Patrick, what would you say to today's agents or investors to do in this new market conditions?
Get a job selling shoes. No, I'm just kidding about that. So I
It's a
would
good one.
say the one thing
How
I would
funny.
say a lot of our real estate agents really should be doing, and again, there's agents that specialize in things that are not distressed real estate. So if you're listening to this, this is a new niche for you. But one thing that I've learned in dealing with more investors in the last couple of years, these guys have tremendous marketing muscle. The investors we talk to have dozens and dozens of leads that real estate agents would kill for. And oftentimes the investors like, I don't want it. It's not going to fit in my buy box, etc. So agents, you don't have to go after everybody in the world. You don't have to spend thousands and thousands of dollars on farming postcards. What I would recommend is get to know some local investors in your marketplace and start piggybacking with them and helping them convert some of their deals. Not every single homeowner is a prospect right now. In life, everybody at some point is a prospect. The question is, if you need to close commissions sooner than later, focus on people facing an actual event. With that being said, Asset Resolution Advisors firmly believes that you need to be educated in that space. Learn some of the tricks of the trade, meet some of the investors that we work with. Gosh, Steve, Juan, we get deals all the time. Got 3 of them yesterday from somebody out of Texas. Do you have an agent that you're working with? Answer, no. Like, that's just mind boggling because a lot of times they don't use an agent, they buy direct from the homeowner. And I get it because that's where their profit is built into sometimes. So get to know these guys, learn the process behind short sales, bankruptcy, all the things that we've talked about. And again, you don't need to be an expert. Partner with those who do. That's us. That's what we do. We've done it for decades. That's one very important factor. But learn where to find these. Super important. Number 3, learn to underwrite the deal. We just talked about 2 groups, right? The low interest mortgage person who's got a mountain of equity and the low interest mortgage person who's choking, they're underwater. And it doesn't even have to be low interest rate, folks. People that got into mortgages in 2023 and 2024 when the market was still peaked and interest rates were coming up, they've got higher interest rates. So they might be absolutely thrilled to sell their property and get the heck out from underneath it. So learn to underwrite. How much is owed? What liens exist? What does the scenario look like? Is it a short sale? Is it a bankruptcy? Is it just a straight out distressed sale? All of these things are important. And number 4, in order to really gain the trust of these consumers, be that trusted advisor. Don't just be a salesperson wheeling and dealing. Talk to them, hear their side of the story. Sometimes these stories are really quite amazing as to what people are going through. And if you've got solutions for them, that can be one of the best customers for life, not to mention an incredible referral source. You'll rarely compete on commissions with these, especially in short sales, right? You call the shots. They're looking for someone to hold their hand to guide them. And number 5, build your distress network. Juan, you mentioned a few of the professionals. Investors. If I'm a real estate agent, I definitely want to have investors because they're sources of listings. They're also sources of purchase sales. The attorneys, whether they're bankruptcy attorneys, foreclosure attorneys, in your local marketplace, people that wheel and deal with the right crowds. Now, one tip, here's a nugget. Not all attorneys are created equal. If you're looking, for example, at bankruptcy attorneys in any given couple of zip codes, there might be 300 bankruptcy attorneys, but there might be 3 that do the vast majority of the business, like real estate, the 80-20 rule. Those are the guys you want to get to know and the gals. Those are the paralegals you want to get to know and start schmoozing with. Bankruptcy professionals, whether it's trustees, we talk about that in our training. That can be a tree that you don't want to go barking up because it's low return for a lot of effort. Probate attorneys for sure. Man, probate is such a hot commodity. And of course, the best partner you can have, your friends at Asset Resolution Advisors. We're here to help you every step of the way. Steve, back to you.
All right, guys, this was a great episode here. So let's close this out here. Today's market isn't really about finding more sellers, it's about finding the right sellers. Homeowners with a 3% mortgage have no reason to move, and they're more than likely not going to be your next transaction. So, really start looking at the homeowners who are dealing with the financial hardships, who are dealing with the foreclosures, the probates, the bankruptcies, even title issues. A lot of those people are looking for active answers. They've always been out there. It just might not be something that you looked at before. And today, more importantly than ever, those are the conversations that matter. So, here at Asset Resolution Advisors, we've spent more than 25 years, going on 26 year, helping agents, investors navigate these type of solutions. We've closed thousands, over 10,000 distressed transactions over the years. We've learned that the biggest opportunities don't always come from chasing the market. They come from understanding the people who have the greatest needs for the solutions. So if you want to better understand today's distress market, start with our free 13 video jumpstart training that we have. It's designed to help agents and investors recognize opportunities that a lot of people miss. And if you're going to handle short sales with confidence, you can also pick up our short sale checklist and how-to guide. We have everything there to make those transactions easy for you. So again, if you're working with short sale, you're working a bankruptcy sale, you're dealing with liens, judgments, any complex issues, Asset Resolution Advisors is here to help. Thanks for listening to us this week, and we look forward to next week. And please, if you have any interest in the topics we're talking about, subscribe, reach out to us. We're here to help.
Amen. Goodbye, everybody.
Thank you, everybody.